All right, good morning, good morning, good morning. And let's get over to the charts. Right, can everyone hear me all right? And let me know you can see that chart. That is a chart of the US dollar. And as you can see, we've had a strong rally up into a a 61.8 Fibonacci retracement from Monday's opening range high to the low that was made on Tuesday, today. And just scanning around, we're going to have important news. We can put this in on the FX Street website at the calendar. So at 9:45, so 15 minutes after the Wall Street Open, we're going to start seeing those PMIs from the US. And this comes on the back of the PMIs from Europe. All right, so what do we get in the PMIs from Europe? Came in weaker across the board. And in the UK, they were roughly unchanged. Just looking at stuff from overnight, we had some hawkish rhetoric from the RBA governor, and that helped to support the Aussie rally. I think those are the main takeaways. And then for the day ahead, PMIs. So these are going to give us our first comprehensive look at the state of the US economy. So they're going to be very important for today. The key thing I would say there is, regardless of the outcome, we might not want to be in any trades ahead of it. So you might want to be flat ahead of that data, which opens up a potential opportunity between now and the Wall Street Open. So by all means, look for opportunities from the high of the day, the low of the day, the closing price of yesterday, the high of today, the high of yesterday. So the highs and lows of yesterday and today, and yesterday's closing price. If we've got any opportunities, we can have a look at the charts in a moment to see if we've got any opportunities coming up leading into Wall Street. Now, we've had a pretty strong move in the US dollar already. Okay, so looking at this chart, we've rallied from the low of the day. So we broke yesterday's lows over here. Why this thing keeps popping up. We've broken the lows over here from yesterday. So we've got day two breakouts in the market. Okay. Now, as I keep repeating, most breakouts fail. So a break of that low led to a squeeze, and that squeeze has been a very strong squeeze right up into the structural breakout point of that leg, which marries up with a 61.8 Fibonacci. Okay. Now, Friday's closing price is way up above that 78.6. So while we're below this area, I remain bearish on the US dollar. Now, that is circumstantial, and it will depend on what the data gives us. All right, so we've opened over here, we've dropped, we've pulled back, we broke above the closing price from Monday, which puts us in a relatively bullish setting. But while we're below 105.70 or thereabouts, we can remain bearish. Now, especially at this 61.8 area. So that is acting as resistance. This is the US dollar index and our baseline for all other instruments, right? So if the dollar is strong, we'd expect all other instruments to be weak. Okay? So keep that in mind. Now, what we can do is, I've done a bit of scanning of the markets, and what I intend to trade only will be first red days and first green days, and day 3 of a 3-day cycle. So for those that do not follow Stacey Burt, you can go and look him up on YouTube. But to make it as simplistic as possible, the markets can move or do move in 3-day setups. So ideally, on day 3, we're going to be trading from the high or low of that day or the prior day or the closing price for parabolic moves that can be extensive on day 3, because you've had 2 days or 3 days. By the time we come into the US session, we've got 2.5 days of order flow building up, and we're either looking for a short or long squeeze. Okay. Now, there'll be more education around this subject as we go, but just stick with me. And each day in these meetings, you're bound to pick up some nuggets, and you might be able to align yourself with the way I look at the market and decide whether it's for you. But in these meetings, we're predominantly talking about the US session and looking for a trade for the session, an in and out job, right? I don't want to be positioning myself in trades that run all day long, ideally, and nor do I want to be holding positions overnight, ideally. Okay, so we can separate that. We can swing trade or we can day trade. If we're day trading, we want to be looking for the explosive parabolic moves that can be done and dusted within an hour or two, or even 10 to 15 minutes, half an hour. Okay, so that's what we're looking for. So what I've done is I've pulled up the instruments that I'm going to be concentrating on for today, and I've categorized them as a first green day opportunity or a first red day opportunity. And I'm going to be looking for the best out of these. I'm going to narrow these down to my timing window. So I'm looking for a trade between the next few minutes. So we're coming up to my trading hour, 8 a.m. New York, and up until this data that's going to come out, well, up until the Wall Street open. So ideally, I really want to be done and dusted in the next hour. So if you want, join me and we'll go and look through these. But basically, I've written off all of these pairs over here. I'm not interested in any of these today. I'm not going to look at them. We can use the dollar as a reference point. So we're up high in the dollar. Okay, so that is an impulse, and we're in anticipation of a correction. Okay, so if this correction picks up any steam, then we can look to short the dollar versus other instruments. So that would mean we're looking for longs in the indexes, longs in the Kiwi, and longs in the Aussie, right? And if we are shorting the dollar, we can look for shorts in the dollar Swiss, the dollar CAD, the dollar yen, right? So let's apply ourselves there. So by all means, put anything you want to in the chat and I will have a look and we'll analyze the chart for you. But in the meantime, we can just work through this watch list that I've created. So this is the NASDAQ, okay? So first of all, what I'm looking for is I'm looking to see whether or not I am at a level. And when I say a level, I'm talking about yesterday's high, which is over here, or low, or I'm talking about today's high or low, or I'm talking about the closing price of yesterday. So as we can see, with this NAS, we're high up. We're at the high of the day. We're not at the high of yesterday. but we are at the high of today. So can we be looking for a trade? Yes, we can. We can be looking for a trade from the high of the day, and we're targeting the closing price. So that closing price is over here, roundabout. There's the close. Where's the high of the day? The high of the day is here. There's the high of the day. Bear with me. So I'm using this line chart because I want to draw to your attention that it is not entirely necessary to use candles. Because what we're doing is all we're interested in is working from the high or low of the day, the levels. I'm not interested in the individual, not necessarily at least, the individual price action. The high of the day is over here. I'm not looking at the 1 minute. I mean, I will look at the 1 minute candles for what's the word I'm looking for? For conviction, for confirmation, right? But more importantly, I'm looking at the levels. What is the price doing at the levels? And as we can see, it's struggling at the high of the day to come up. So our thesis is to go short. Okay, so at this point, I can come down to the 15-minute chart and I can start to marry the levels of the index, the quarter points, the round numbers, and I'm looking to see if there's anything interesting going on at a level, right? So we've reacted from the high of the day and we're dropping, lo and behold. Is that our trade? Potentially. That could be our trade, right? So we're a new hour. So when we're turning a new hour, quite often we can see a significant drive off of that new hour. And if it's a significant drive in our direction, well, we want to be asking ourselves, do we want to get involved? And the likelihood is yes. If you're working from the high of the day and your thesis is that we're coming back to the closing price, then that's all you really need, isn't it? Now, however, in this particular scenario, when we're looking for the dollar to sell off, it might not be so wise to be shorting the NAS, right? If we're looking for a continuation to the downside in the dollar. With that being said, there's no guarantee that this dollar is going to sell off, and you can't win every trade. So if you're working from your high, well, this is already taking off. If you're working from your high and you've got various confluences that are all stacking up and you're breaking structure, the behavior of price, then there's no reason why you can't get involved in this market, target that, because the dollar could still be going up. And that's exactly what it's doing at the moment. So it's pulled back. It's come into what could be a support area, right? So this is the open of New York. So this low here could well be the low of the day. We don't know. This 61.8 might give out. All right, we're in a strong dollar environment. There's plenty of fundamental reasons why the dollar would be strong. You had weak PMIs in Europe, fueling the divergence theme behind the European Central Bank and the Federal Reserve, and therefore strong dollar. And just because we've come up to the high of the day doesn't mean we have to sell off. Doesn't mean we have to. I mean, we already have pulled back, and perhaps this is the low of the day. So there's no reason why we can't be looking to short the NAS at this point, which is continuing to gather steam. So if I wasn't waffling for so long, then that could have been an entry, and you'll be at break even, taking money off the table, sizing in, and doing all sorts of fantastic things and making money, which is what we're here to do. Also, look at this. We've had 1, 2, 3 pushes. That is also what we're looking for. We're looking for things in threes, right? So we've had 3 pushes to the highs of the day, and it's no surprise whatsoever that we're getting a sell-off in this NASDAQ. There are traders, there is volume in the market because there are traders that want to take part before this data, right? So there is volume in this market. Now, having said that, the caveat to this trade is it's a nail and bail. I would not want to be holding on to this, expecting this to continue lower, lower, and lower. Not saying that it can't, but I'd want to be in and out. Reason being is we had yesterday a bullish close. Right? That green arrow there, I've described to everyone what all my indicators are for the exact purpose of what we're looking at here. We've had a bullish close, so it's just a quick reference for me to look. Were we closing bullish or bearish? And that is a first green day. So ideally, I want to be long of this market. So we can play this 2 ways. Scalp to the downside, not holding on for too long, in and out, making some money ahead of this data, flat ahead of the data in the Wall Street Open, seeing how Wall Street and the data affects the market. And if we're getting confirmations from a level, i.e. either the closing price or the low of the day or the low of yesterday, because this could easily come all the way down to the low of yesterday. I'm not saying it can't. We'd be looking to take it long again in line with the bullish momentum and the longs that are dominating the market, the bulls. Okay, so I hope that makes sense. Any questions around that strategy? Because that is what we're going to be doing day in, day out in the US session. And as I've explained to others, I'm also working on a swing trading strategy using smart money concepts. Those videos will start being released. 5 have already been sent for production, and I'm just waiting for the go-ahead for those to be released as part of the package membership that you have. Right, so there we have it. So that would have been a trade, and with this, I'd be looking to enter in on the 1 minute chart. Okay, so, but now having moved along so far within that 15 minutes, I'm not chasing that move. What I'm now doing is I'm looking to the next 15-minute candle rotation before I decide whether to enter or not. If the price action is behaving accordingly with the thesis towards the closing price, then within that next 15-minute candle rotation, I can start looking for my entry, depending on the behavior of price. Okay, for a move to the closing price. And another thing to note, that quite often when you're involved on the first 15 minutes of an hour, just bear in mind that although that first 15 minutes can take you towards your target or in the direction of, the next 15-minute candle could well be a correction and pullback into your entry. So bear that in mind, right? So which is essentially what could happen in the next 15-minute candle, and it can happen within the first 15 minutes, which is what's happening here. Okay, so just keep that in mind. So aka the first mouse gets caught out, the second mouse gets the cheese. All right, I've been asked for dollar Swiss, so I'll divert to there. So this is a first red day setup, right? So what I'll be doing is go into my 15-minute chart, looking at how the land lies. So looking at my highs and lows of the prior day. There's the high of the prior day. There's the low of the prior day. Okay. This was Monday. And Monday broke up to the upside. So we had longs in the market that was squeezed out all the way down back in towards Friday's low. Friday's closing price. Let's have a look at that. We'll use a candlestick chart for that because I can't get my bearings on a line chart. So the closing price on Friday, which I'll use as a reference for the rest of the week, by the way. So that's the closing price on Friday. We'll leave that there for the whole week. So we came down, we broke the closing price on Monday, and we stayed low. Tuesday, we have tried to move up. Stops taken out on that move. Most breakouts fail. We broke out of last week's low on that move. Most breakouts fail. What do we expect? A correction. And we got a very strong impulse taking out the highs of Asia, the highs of the day, and London at the time, the closing price of Monday. We've stacked up. We've rested against that closing price. That could have been an entry if anyone was trading in and around London for the continuation of that short squeeze, right? So it's a peak formation low. Now, we closed, what do we have? As a first red day. So we encounter of that bullish close on Friday, we closed below, and that flips the bias for us to be shorting. So we're at the high of the day, high of today. Now, and what I'm looking for is the behavior of price. Now, as we continue to make higher highs, I'm not interested, right? Because we're on the front side of that bullish run, right? So we are in an uptrend, not interested in shorting this at the moment. So what I'm going to do is wait and see how the price behaves at the next 15-minute interval. And at this rate, it will most likely be not until sort of 8:30, 8:45 that we might see a deceleration of this rally. And at that point, when we start to see, if we start to see a deceleration of the rally, right, and a break of trend, that I'll be looking to short the market and target where? Can anyone hazard a guess what I'd be targeting on dollar Swiss? Steve, what do you think? Steve, you've asked me to look at dollar Swiss. Are you still with us? What are you thinking about dollar Swiss yourself? And what do you think my thesis would be if we're starting to slow down on the bid, decelerate, break structure, looking for a short to where? Yeah, waiting for the short. And what would be my targets, do you think? We've got Friday's closing price at 89.22. We've got yesterday's closing price. So those would be both would be my areas of interest, especially yesterday's closing price because it comes in at the high of Asia and the bulk of London's trading around the equities open. So for me, given that we've used it as a support line and really taken off from there, the price is out of balance from that juncture. So that would be my ideal target area if I was shorting. Right, so shorting from 89.50, that's what you're saying. That would be absolutely beautiful because it lines up with yesterday's high. So perhaps we're pushing all the way up towards that. We'll have to see, but I'm not interested in doing anything until I start to see a convincing deceleration and a breakdown of this rally at my timing windows specifically, and at levels like you suggested, 89.50 towards the high of the prior day and so forth. So no idea. This can continue going up, up and up. We don't know. We'll just have to see how things pan out. But yeah, for me, I'm looking for an entry, given that it's a first red day, in line with Monday's bearish trading activity. Bears are in the market. We broke out to the downside. So this is a short squeeze, and I'm looking for bears to re-engage that are looking for a discount, looking to protect their highs from yesterday, their stop losses above. Higher time frame traders will have been buying that breakout, selling that breakout with their stops above. So there's going to be an interest, big money interest to protect those highs. And when they come in, that's what we get on the back of. That's the thesis. Right. Can you look at sterling dollar? I can. Sterling dollar. Not sure it's on my hit list for whatever reason. Can't remember. All right, sterling dollar on the daily chart. Right. So let's define the trend. Pretty much bearish still. We've had some higher. We've had an attempt to correct higher. We broke this lower high, so we came down, pulled back, dropped. So down, up, drop to make a lower low, and then we've pulsated up to break that, but there's a lack of conviction here. That's a very strong, well, it's a death candle. So bears, again, like I said, protecting their stops. So they've come in hard, as we're looking for on dollar Swiss. They've come in hard. Bulls are in, engaging again. They're testing the bears yet again, but yet again the bears are coming in. So the focus here is on a continuation to the downside, front side of that bearish trend. That's the longer term outlook. So dollar strength dominating. The PMIs today at 9:45 New York will likely be pivotal in that respect. So we'll see. This is a W formation. Therefore, this could act as support, the neckline of that W formation. So let's just see if we can break that on the back of the data, or if the data is going to support the dollar, the way on the dollar and support sterling from this supporting area higher for a third attempt at this resistance area. All right. Is that all you need on sterling dollar, or anything more nearer term? I mean, that's essentially what my thesis is even for today. Support, resistance. On the 15-minute chart here today, you've got the high. We're at the low of the day. I expect this to potentially start to consolidate. This is an area of support as per those candles over there. Okay, short from top, so wondered what you thought. Well, we're coming into support here, so bear that in mind. I personally would be offloading if I'm short at this point, taking some profits off. I'll be at break even, and if we break below here, I've got a runner on targeting the order block, point of interest, whatever you want to call it, that area down here where the rally came out of. Sterling Oz. I don't believe I've got that on the radar either. Sterling Oz. Maybe I do. Hold on. Sterling Oz. No, it's not on my radar. The Aussie is strong on the back of the hawkish comments from the governor overnight. And we're breaking structure. I think this would be a continuation trade to the downside, especially if the US dollar firms up and weighs further on sterling. But at the moment, sterling dollar, as we just looked at, is at support. So I'm looking for a bit of consolidation here. But if the dollar firms up, then we could see a continuation of this move. And where would we be targeting in that respect? Well, we've already broken out of yesterday's lows. It's a pretty firm breakout. What is that? How many points? Pips? 32, 30. Okay, that's a decent amount of pips. So I'm looking for stall. If we get this correcting strongly, then I'd say that the move's done. If we just get some, half-hearted attempts from the bulls at this round level, then this area here, 92.20, could act as resistance, and you might see a continuation to the downside. Right, gold. Okay, we're going to wrap this up with this gold analysis. I want to get to the market and see if there are any opportunities, and I'll comment on anything that I see in the chat room. Gold is a first red day prospect. So we're pumping up to the low of yesterday. So I'm going to look at how price is behaving around here for prospects of a downside continuation. I'll also keep in mind the closing price as a potential resistance area. So I'm looking for a pump and dump opportunity in gold. From the closing price or from yesterday's lows. But we've come up pretty strongly into those lows, so perhaps we're going to keep on coming up, and I'll be looking at the closing price as an opportunity. So that's silver. Sorry, what am I doing? Well, same scenario would be for gold. So if you recall, I've done quite a lot of analysis on this already. This was early doors today. So we talked about that big fat arrow. I drew that last night with you all on yesterday's watch list at the close of Wall Street, talking about how below 1980 we're looking for shorts. So I don't know whether we've got anyone in from trading Asia yesterday. I think it's too early for Zeb to be here, but I don't know if any of you guys partaked in that, but that was the opportunity I was talking about, and that paid off very, very well. But for today, Early doors, I was looking to target 1960. We've already come in well below 1960. Crikey, we've dropped into 1950. Uh, Day two breakouts. Right, so we've well and truly done today's ATR on that move by $10 or so. The average true range might even have it up here somewhere. Yeah, the average true range was around $22, and busted. We've done that. So we've got day two breakouts at the low of the day. Right, so we came right down to last month's. What was that? Last month's high. So all of this is volume that broke out of last month's high. Right, everything up here. That's last month's high. This red line, this red dotted line. I don't know if you can see that because of all my drawings. Let's get rid of the levels, clear it up a bit. That red dotted line was last month's high. So we burst out of that in an uptrend. We've come out on the backside of that uptrend. We and we are looking for a move to the downside. It's a first red day. For some reason, this arrow is green. It should be red. We closed lower than the open. So that's the first red day opportunity for today. So what we're looking for, this dump is being met with a pump. How much are we going to pump up by? We don't know. Again, I'm going to be looking at the closing price as a potential area of resistance. And I don't know that we're going to get anything with before 9 o'clock. So perhaps the opportunity is to be scalping to the upside in anticipation that this market's going to move up towards the closing price. But ideally, that would be in a nail and bail scenario, in and out, because the bias is to the downside. So really, I don't want to be buying when I'm looking for shorts. But whatever the market gives you. So at the moment, we're coming up to what was yesterday's lows. So I'd be a bit hesitant buying at yesterday's lows because that could easily act as resistance. I don't know why I've got that W on there. It's from earlier. So just keep that in mind. If anything, I'd be looking at the behavior of price at this level for prospects of a continuation to the downside. But there's not very much in it at this juncture. But the line in the sand on the 15-minute chart is down here somewhere, being that low. If we come down to a lower time frame, look at the 5-minute. That is structure and guarding a move to the downside and a continuation for the day. All right, we're getting this strong impulse met by an equally strong impulse. If this closes down here somewhere, now we've got 2 minutes or so for that to do so, then that would indicate that we're potentially decelerating on the bid and looking to stack up for bearish structure, and price action will be monitored. Behavior of price at 9:15, 9:30, 9:45. That's where we're going to be looking to see how Wall Street and the data affects the market. But for the meantime, we can be looking at 8:30 and 8:45. Perhaps we'll get an opportunity to short, or perhaps we're going to get bullish price action and confirmation that we're heading higher ahead of the Wall Street Open. And perhaps that is where our short for the day, the major short, could take place if the data warrants it. And perhaps that's where we're going to get our biggest asymmetrical risk to reward profile on our setups. Euro dollar, not on my radar. Bit of a nothing day, I think. Well, depending on what the dollar does. But for me, it's not on my radar because it's not being driven by higher time frame traders. It's mostly inside of Monday. But if there's an opportunity, there's an opportunity. Just for me, I'm not looking at it. It's come down to the low of the day. No idea if this is going to continue lower. This is coming into the high of last week. So we've broken out and we've come back inside. This could be a failed upside breakout. We might close inside. We could be using the closing price as a resistance if it does pop up again, perhaps. Or it could continue to break down through the high of last week. No idea. But for me, it's not on my radar. It's not one of my setups for today. I'd be inclined to look at it tomorrow because it will be Monday, Tuesday, and Asia, London on Wednesday, order flow for a potential explosive move in the US session on the third day of the week. Okay, so we're going to call it a day there, and I wish you the very best for the day ahead, and we'll wrap things up at the end of the day, see how everyone got on, see how I got on, see what the markets did, what they did or didn't give, how we're setting up for the day ahead, and so forth. So good luck. Thanks for being here. Appreciate you all, and I'll see you in the chat room.